Good day everyone, this is your European Open Briefing for Thursday, September the 29th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main news item today is of course yesterday's surprise announcement by OPEC that they've reached a deal to freeze output, or rather they've decided to cut output, which is far better than what markets were expecting. So the agreement involves the cut in output of around 750,000 barrels a day. We saw oil prices jump 5% after the announcement. This also gave a bit of a lift to commodity currencies, and of course the safe haven yen slided after the announcement, given the rise in risk appetite following the surprise deal. In other news, we've got more split views from Fed policymakers, and this is pretty much keeping the uncertainty going with regards to the rate outlook in the United States. So let's have a look at the OPEC deal. So the agreement involves around 750,000 barrels per day of a production cut by OPEC members. This is the first agreement by OPEC countries since 2008. The details of the agreement have not yet been worked out, and they're going to have another meeting in November to discuss how the cuts will be divided among the OPEC members. There are some doubts, however, whether or not the deal will go ahead, particularly given the previous high level of disagreement between Iran and Saudi Arabia, although we should point out that Saudi Arabia has already agreed that Iran, Libya and Nigeria can be exempt from the cuts. So it is looking like there's a good chance that the deal will go through. The other risk, of course, is how non-OPEC countries will respond. Russia has yet to say whether or not they will follow with a production cut or at least a production freeze of their own. It is possible that if non-OPEC countries continue to raise production, that today's or yesterday's announcement may not hold for very long. Now let's have a look at how commodity currencies reacted. We saw the Canadian dollar rise sharply. We can see here the US dollar fell around the 1.30 level against the Canadian dollar. Canada is of course a major exporter of oil, so its currency is very sensitive to oil prices. The Norwegian krone also strengthened after the announcement. We saw the US dollar fall to around 8 krones after the announcement, and also the Australian and New Zealand dollars. Now they're not obviously, we know that they're not major oil exporters, they're actually net importers of oil, but overall boost to commodities triggered a bit of a rally in the antipodium currencies, although they both have since fallen back during the Asian trading from the gains late yesterday. We also saw Asian stocks open sharply higher today, as well as European stock indices also doing well today on the back of improved risk appetite. Now the Japanese yen is the biggest loser out of this, which is good news for Japanese policymakers who have been arguing for a weaker yen. We saw most major currencies rise sharply against the yen. The dollar is back above the 101 level. It was last trading around 101.50 yen. And there's another effect, of course, from the deal, other than giving rise to risk appetite. Higher oil prices would give way to inflationary pressures, and this would likely put pressure. We would probably put an upward pressure on interest rates globally, and that would weaken the appeal of safe haven assets such as the yen. Now, news out of Japan today included retail sales. Japanese retail sales fell by 2.1% year-on-year in August. This was the 6th consecutive month of annual declines, and this once again puts more pressure on the back of Japan and the Japanese government to come up with more stimulus measures. Now looking at the dollar against other currencies, the dollar was more mixed. The dollar index we can see has pretty much stuck in its recent range. It's only saw a modest lift from the OPEC deal. There is uncertainty ahead of the US elections, of course. And one of the factors from the elections is the fact that both Hillary Clinton and Donald Trump are in favor of a weaker dollar. Now looking at the yen, we of course have more Fed speakers making public appearances. We've got the Cleveland Fed President Loretta Mester is of course a hawk within the FOMC, and she warned yesterday of the risks of falling behind the curve if the Fed delays raising rates by too long. Chicago Fed President was more dovish. Charles Evans said that interest rates may remain low for some time. And this once again highlights the split views among Fed policymakers, where some argue for rates to stay at current levels until there's more evidence of inflationary pressures, whereas some are arguing that the low unemployment rate in the US risks overheating the economy. Now looking ahead to the rest of the day, we're going to have a much busier calendar than we've had in recent days this week. We've got German unemployment and flash German inflation coming up. There's also the Eurozone Economic Sentiment Index. And as we can see here, the Economic Sentiment Index is expected to stay unchanged at 103.5 in September. We're going to have a number of ECB speakers later in the day. We've got Peter Prey, Vitor Constantio, the Vice President, Ewald Novotny, and Jens Wiedmann, which is the Bundesbank President. The US calendar is also looking pretty busy. We've got the third estimate of GDP second quarter growth, which is expected to be revised slightly up from 1.1 to 1.3%. We of course have the weekly jobless claims, and also we have pending home sales coming up. It's going to be another busy day for Fed speakers. We've got quite a number of speakers today. We've got Dennis Lockhart, Jerome Powell, Neil Kashkari, and Esther George, as well as Janet Yellen. She's going to take part in a debate about banking and the economy. We don't know whether or not she's going to mention monetary policy or specifically the rate outlook, but that will definitely be eyed by the markets later in the day. That's it from me. Thank you very much for watching, and have a great day.